First off, by becoming rich. Take all your money, buy Bitcoin.
Wake up every morning and say GM.
GM. Welcome to September the 1st. Today is Sunday. New month. I'm going to be honest though. This is not looking good, bruv. Maybe it'll get better. But really, it seems like everything's going to go lower. And I'll give the usual disclaimer that on a new month, you know, you get a new month, you get a new monthly candle. The candle starts moving down. There's no upper wick. That's true. And you'd say, well, typically you want to wait because there should be a wick on either side. But the first directional move quite often comes off the monthly open. And maybe it comes back later, puts on a wick or whatever. But you just got to keep it, you just got to keep it simple. And Bitcoin is, you know, toying with this Feb 21 pivot again. Dangerously close to losing it. Literally, it's exactly where we're at right now. And struggling to hold on to it. Testing this level a dozen times. And everything in here, I would say until price convincingly closes above this level, which ideally you'd want to see a sweep, and then building up and holding above here. Even then, there's still danger, but if it sweeps, it holds, it comes up, it gets back above, and you start to push towards this 63, then when you break 63, there's no reason why it's not going to go higher. At that point, it's looking a lot better. To be honest, that's like a long way off currently right now. So when you look at low time frame, you can see chop. I can see it squeeze up, and I'll talk about that in trade of the day. And I'll talk about the immediate breakdown path, but there's a million ways this can go. It can chop around, it can touch that level, right? That can definitely happen. In fact, I really want to highlight this path here. This is one of the most common bearish paths, right? Where you come down, you have an initial bounce, you come back to support, people start shorting, it comes up, it takes those stops off that bounce, and then it breaks down. That's very, very, very common. So, you know, I am very cautious here because I think that if people expect a red September, for some reason people are saying September is going to be green, which I guess it's, you know, mostly what it is, I think, is that when you look across the last few months, and we've had the summer period, so we've had, including May, because they say, you know, sell in May, walk away, that's that old fucking saying. So May was actually green, but it couldn't take out the highs. Red June, red July, red August, and each time it bounces, but each time we're moving lower. Right, look at the line chart. We're moving lower and lower and lower. And we had a monthly close in August that closed below the April low. So on a monthly time frame, that's a BOS, break of structure, right? And a pretty high volume break of structure as well. And pretty high volume break of structure too. I mean, I'll get an aggregate chart just to be most accurate with it. There we go. The highest volume since March, right? So when you're looking at the average volume, that's obviously including everything that happened at the lows, which in fact is very skewed by Binance. So let me change this to be the last year, right? Yeah, so since August of last year when this rally began, let me look at a 12 period MA. And you'll notice that we have above average volume here. So we had two above average volume spikes. One was in March. So we're looking at the last 1 year moving average volume. March, we hit the highs, above average volume. Then we come down, we set a level. I mean, this monthly close is incredibly important. That monthly close is also exactly at the old value area, or right around it, that 60 to 61 area. Right, so I'll wipe that off just to see it clearly. I'll just use the cursor. 60.6 on that chart, so anywhere between 60.6 and kind of 61. And then we close below that. So we had a August close at 58, roughly 58.9, 58.957 according to the chart here. and with above average volume. And I mean, you don't get many of these. Like, let me go to a chart that shows a lot more price history, and I will be doing a monthly preview video as well. You just don't get many monthly break of structure that end up bullish, right? Here is probably the best hopium example, where price came up, it set a monthly low, it tried to push higher in June, it failed in August, it closed lower, we held till September, and then boom, away we go. So there's that. But monthly downtrends, you can see them over here. It's kind of hard to see, it's kind of hard to see without the candlesticks, and there's not much data on a monthly, but I'll show you here, right? So you move down, you set a low, you move below it, you close there, right? Bearish close. We have a bearish December. We then have a rally back up, and of course we go lower again. So that was in the midst of a downtrend. Here, break of structure, break of structure, break of structure. So you did get a bounce, but the break of structure was already showing the downtrend. And over here, break of structure, BOS, BOS, and obviously the last BOS we end up bottoming out, but it takes from January until September to bottom out. This is 9 months, right? So, look, that is a very, very concerning chart. I mean, don't look at the monthly often. I tend to look at it really just around the start and the end of the month, because it's not something I use to trade. And the only thing that matters on the monthly for me are the closes. If you remember, maybe we can do this on replay mode. If you remember back during the month, which I think this should do, the monthly opened, it was started with a move up. You can sort of see this. I think it goes through in like 3-day increments or whatever. And then it went down, and then we went way down, and then we had the nice rally, and it actually went green briefly, right? Well, it doesn't show it there, but it did go green briefly in the middle of the month, or maybe it is going to show it. I don't know. Right, it moved up. It did, yeah. So it went briefly green. It was just for a day there, but it must have closed red. And then we closed lower. So we had the whole move down, the whole move up. We tried to reclaim some of these levels. We closed with our lowest monthly close in all of this consolidation with high volume. The wick below is basically like the last hope. And I do think we at least attempt to fill that wick in. Higher time frame reasons to be bullish for Bitcoin exist, absolutely. I've detailed those in last week's weekly outlook. There's plenty of confirming reasons to be bullish. I'll also break down though some of the very valid reasons to be bearish, because they absolutely exist. And a few things, like one of the things that you want to remember as well, so monthly weakness, altcoins, echo bubble, and then BTC with an extended echo bubble based on the ETFs. Did the ETFs basically trick everyone? And to me, if this goes lower, it will look so obvious in hindsight, right? Let's just imagine that Bitcoin goes down, however it goes down, it will just look really, really, really obvious in hindsight, just like it always does. You're like, oh, it's clearly around the top. Oh, what, you mean you guys didn't sell when you could see this and this and this and this and this? Or what, you're waiting for a bounce to sweep the highs? None of that shit needs to happen. Like, you can't sit around waiting for, oh, well, look, all these highs are left untapped. We need to sweep them first and then down. Or it just goes down, right? And again, it's like comparing to past is relatively pointless, right, in terms of fractals. But past market structure, which is like market structure is just the absolute rule of markets, right? You make new lows, it is a BOS on the highest time frame possible. It's bearish. On the weekly, it's really like battling as hard as possible to try and form a higher low here to invalidate this downtrend, right? So whenever the market was starting to move up here last week, this was starting to look early signs of being bullish, and I mentioned this. If you see it close here, then you have a low, you have a high, you have a higher low, crucially, and you have a higher high. Boom, there we go. Instead, it has reversed, and it's trying its best to hold on here, but to be, if you want to have your next confirmation, it's close a weekly candle, which is today, right? So it's very important what happens today. Close a weekly candle below this line, and you've invalidated that higher low, and then you're looking at 55.8. And you close a weekly candle there, well, that's more the same. Now we're back in a weekly downtrend. Then it's undeniable. Then it's either going to just drop, or whatever bounce you see, you're expecting a lower high. I mean, that's how it goes. And this is important too, because, to just go back here to like some of these areas that I mentioned. Where was that break of structure that I talked about? It was moving down, and you said, hi, here we go, right? Break of structure. What happens? It slows down for 2 months. It is a strong move up. It comes back to resistance. It's not like it's just going to collapse necessarily and fall down to zero. Now, obviously in 2018 it did. It just was break of structure, break of structure, break of structure, and just kept going down until the bottom formed. This will look like something entirely different, because it always does. Price never repeats. But market structure is not a fractal of price. Market structure is just literally, this is how trends move. They move up like that, they move down like this, they move sideways in any form or fashion. And that's what we've had for the last 6 months. If you go to the weekly, we have one of these more sideways. Right? It's clearly not going up. It's clearly not going down and staying down. It's trying its best to hold. But just look at the weekly. I mean, you've got a bearish engulfing weekly following a weekly recovery candle. It's just not good. On the daily, you've got to move up. And this is why this view will change pretty quickly if Bitcoin doesn't basically roll over here. Because this is exactly the worst thing you want to say. You move up, you take out the highs, you come back down, you try to go higher, it can't, and it's like this. It's just like rolling over. Before every major breakdown, Bitcoin tends to look like this, where it's just drifting, and then you see one of these big candles. I'm not saying it is going to happen. Again, it would have to break below here and start to build momentum before you'd say that, but it's certainly clustering up like it's going to. And so, you know me, I'm not like a fucking alarmist, perma bear doom or whatever, but I do see that possibility. I do see that very real risk for a collapse, and that could happen today. And normally I would say, weekend's quiet, start of the month, all this and that, but what I'm saying, it could well be today. So definitely want to have my eyes on the market very closely. And the other thing, I want to look then at the positioning since the bottom. So just in dollar terms, we have a build up of 2.1 billion on BTC since the lows, and I'll do contracts in a second, but I want to look at Velo as well to look at the CME, which is important. Fuck off, man. Okay, they've got a new website. Very good. Over here, I want to look at the last couple months off the lows. So the lows were August 5th, yeah. So August 5th, it went as low as 7.32 and up to 8.43, so over a billion. So there's about a billion on CME and 2.1 billion on the rest of the exchanges. So 3 billion in terms of dollars. In terms of coins since August 5th, it's up about 6,000 contracts. And over here, since the lows, it's up. So since there, we squeezed out first. So since the bottom, right, which happened a few days later, because first some contracts closed out in a short squeeze. So new positions started to build on Bitcoin around here, and it's up about 26,000 contracts. So that's 26 and 6, that's 32. So you've got 3 billion in nominal terms, you've got 32,000 contracts. It's important to check the contracts too, because the price change of Bitcoin will change the open interest, right? So if you look at, for example, 2022 is a really good example of this. If you're watching only the dollar amount, you'll see that during 2022, during the bear market, Bitcoin's open interest mooned. Looked huge, right? But it didn't in nominal terms. So you have to compare both. Why did it rise so much? Because price was falling so much. Right? Price was going from the bottom here, where it literally started at 57k. By the time the open interest peaked, priced at 20k. So every contract is nominally worth less. That's why contracts can rise, but the total dollar value can fall. So you have to compare both. Total contracts has been falling steadily since then as the nominal has been rising. So that means that positions have actually net been closing. This doesn't show you positions. This shows you the value, the total value. This shows you the actual positions. If I have 1 BTC open and you have 10 BTC open and fucking someone else has 3 BTC open, that's how it's measured, right? On your account, it tells you how many contracts. You could have 0.1 Bitcoin, you can have 1, you can have 10, you can have 7, 3, whatever you want. And then it will say beside it the value. So the value has risen, not because people are opening positions. This looks like the value is rising loads. Like loads of contracts are opening. They're not. There's literally no contracts opening. Net. From here, from this low to this peak, there were net, well, probably a few opening, but very little. From here to this peak here, you're looking at a slight increase in net contracts, but most of this is driven by the price appreciation, because price went from 40k to 73. So what that means is, instead of opening new positions, people were pretty much holding their positions. So some were exiting, some were entering. That's why it stays pretty much flat. And so anyone who's holding at this point is basically holding more risk, because they are now holding open. If they're still holding a position open, they're holding open a position that is worth significantly more than it was before. They're paying more in funding because the position size is how funding fees are charged. And they're carrying more leverage. Literally, by definition. If you opened a position here, right, 1 BTC, and you had, whatever. Let's say you did it with no leverage. You did it on purpose, no leverage. It would cost you 39k here. By the time it reaches up here, if you haven't closed it, your position is worth 73, right? So your position is worth more, but you have the same number of contracts. So you are carrying a higher position size, even though when you opened it, you used just the 40k. Your account is worth 73, but you're holding a position that is a higher value. What happens here, and this is the important part, which you can't really tell, but we do know what human nature is. What happens here is, what if somebody uses the money in their account to open other positions? You can do this on every exchange, portfolio margining. So whenever my Bitcoin, if I bought 1 Bitcoin and it was worth 40k and then it went up to 73, with the 73, I could go and long some altcoins and use the Bitcoin and the collateral in my account as the margin for it. And that's what a lot of people did. And then when it starts to drop back, then you're over leveraged. It's not just about holding your BTC as the only thing in your account. That would be foolish to think that that's the only thing that happens, because we know that there's loads of altcoin positioning that opens, and people don't tend to add more money. People don't have infinite money. What they do in a bull market is price rises and you play with your profits. On paper, or just imagine you own Bitcoin from 25. Well, when it's at 73, you're like, holy shit, I've got so much extra money, let me open up some other positions. And yeah, it's okay, but my Bitcoin's worth 73, so I can risk 5k here to trade this altcoin. Then the altcoin loses, and suddenly you're like, oh, now your Bitcoin's worth 61, not 73. You're getting rammed twice. All of this is to say, a positioning reset is very possible, a further reset. And I mentioned this yesterday, and I talked about it before, and I'll talk about it on monthly preview. This area here, right, this retest is an area I'm looking at. And with Bitcoin being below this pivot, it's certainly something that needs to be closely monitored. And I'll look at a couple of common, because as soon as Bitcoin rallied off the lows, some of the most common altcoins that people would push back into would be the memes, the ones that did well. So you got Pepe, definitely. And this, to me, it has had everything you'd want to see before a new low, right? So you have, just like here, you have a move down, people get too bearish, you have a counter trend bounce, then it goes to new lows, then you have a counter trend bounce, you actually have two in a sweep and a false breakout, and that will go to new lows, and that's probably your strongest support. And then you're all the way back down here is where Pepe probably will end up going if this market turns bearish for the next few months. It's going to fill all that in. Same as WIF. This is the other big crypto coin that everyone loves, and I talked about this path here. This is the old Doge path coming back down to fill in the inefficiency. It's had the bounce, it's had the sweep, it's had a false breakout, and I mean, market's going lower, in my opinion. And what you have to do is then obviously position yourself around that tactically for trading. This is really important because I sold my Bitcoin at 63. I'm not saying that I would sell here without, just fucking no thought and just be like, oh, sell here, it's all good, you're fine. It's not really a great place to sell, right? Of course, any place is good to sell if the market goes down. So if you're thinking about shorting or selling, you have to have invalidation, which the clearest, simplest invalidation would be Bitcoin bands go green again, which would require Bitcoin to do this and probably go back to like 62. Then the bands will go green. So if you have that in mind, then you say, okay, well, if I was going to short or sell, my initial stop loss would probably have to be at like 64 or even above those highs. When you then think about that, it should make you think, okay, so should I short now? Or, if it drops down and people start to panic and sell, could it bounce up and could I sell at 61? Could I sell at 62? This is the whole nature of a counter trend bounce, right? Consolidates, moves up, false breakout. This is where we are now. People start to short, but it leaves that. You could just do that, right? And we could be just maybe days away from that. Now, obviously, the risk on the downside is that you don't even get that counter trend bounce. We have had it. We had the rally. We had a bounce here. Maybe it's just going to roll over. And there's so much excess supply that just falls straight down. But guess what? If that happens, what you're probably going to see is a revisit to this area. Okay? This is important. Patience will almost always pay off. If it drops down, okay, people will start to panic and load into shorts. It will squeeze up, right? And then it will chop around or whatever. But at some point, it will probably come back to this area. And it would actually be a better time to short or to sell if you wait for that successful retest, which would be a bearish retest from the origin of this impulse. And this is all hypothetical, right? Remember, this is assuming it actually goes there. So what you do is you wait for confirmed weakness, which actually you have to sit and watch it go lower, right? If you don't have a position to short here or whatever, or sell, you watch it go lower, you wait for the weakness, you wait for the retracement back into the area because people will start to short here and they'll short more and they'll short more and they'll get squeezed. And on the retest, when everyone's like, oh, we're back again, right? Equivalent of here, equivalent of here, equivalent of here. When we bounce up like that, we're back, let's go. Just remember what happened before. Just remember, wait a minute, no, I had bearish confirmations. I'm supposed to be shorting this. And then you can short it because you have the best invalidation. Because if it retests like that, you short it, you say, well, as I short here, I could be wrong. Maybe we are back. Maybe we are going to the moon. But I know I'm wrong very quick. I'm wrong here. Which is better. You have a better invalidation. Compared to panicking and shorting here or selling here, where does your stop go? Well, it has to go in the same place. So you just have worse risk reward if you're waiting to chase the breakdown. And this is what happens all the time. Like all the way down here, right? If you go back and you imagine this, and just a lot of times it helps to just go back and think about these moves. Nobody wants to sell here. I talked about this on yesterday's stream, which, by the way, weekend workshop, check it out. It disappears tonight, so make sure you get seeing it. They don't want to short here because it's not really moving fast enough, and they're like, oh, it's come back in support, it could be fine. And mostly people just don't want to sell because they don't want to admit that they might lose money, and they're like, oh, but I have to hold Bitcoin because suppose you're going to 100k, blah blah blah. Then a big move happens, and people decide to short here. Now this is where the panic comes in. But if you're going to sell here, and you're like, well, this is definitely bearish, where does your stop go? Right? Your stop has to go at minimum above that daily high. At minimum. And you might be okay for a while, right? And it goes sideways and it doesn't stop you out. You go, oh, I'm a fucking genius, right? We're going to fucking zero. Let's go. Let's drag this down. It's going to zero. I'm an absolute genius. And then what happens? Where does it come? Watch. Right back up. Right? And so, and obviously, for anyone who's short on the way down, same thing. It came all the way back up in a counter trend bounce, in a bearish bounce, all the way back up, cleared up all these stops, but it went lower first. So that's kind of what I'm trying to say here. It can go lower first and still bounce. But it's going to have to go to an area where it generates enough liquidity to bounce, which might be sweeping these lows, or it might be retesting the lows, which I think is that kind of 50k area, which maybe if you draw it across this old zone here, Maybe it has to come back into that area, whether it goes below or not, to then bounce into this area. And this is all, by the way, this is all assuming it's bearish, because it is bearish right now. If the market changes and we finally see some bullish, which to me would look like probably September, failing to go back down here fully and coming back up and holding, and we're still at 60, 64, 65 at the end of September, and we've a green September, I'll be like, cool, that's probably an invalidation of the bearish setups, which is great. But it's going to take a month, at least. So, trade of the day, I'll talk more about specifically trading it in the next, few hours, going into the weekly close and what we could see and where the bearish could be. And if you're tactically looking to trade this, you first of all, separate your spot bags and your holdings from a trade. Remember, I'm a trader first and foremost. A lot of the stuff I talk about is about, shorter, lower time frames and capturing specific moves within these levels. Like, for me, if this level breaks, I see easily how price can continue lower and lower and lower. At this point, I would be looking out for, again, of course, it can keep going down, but I'd be looking out for a really strong counter trend rally. So if I'm looking at this as a trader, I'd be looking at, okay, there's probably a few momentum trades you can take in here, but you want to have in mind that you want to be closing them, right? This is probably not the best place to short and hold it for 12 months and that kind of stuff. You have to remember that holding is for spot, long. You're not trying to hold a short throughout the entire bear market. You're trying to time specific entries to capture parts of the downside and then exit. Right? You're supposed to trade it on the way down, not hold. You don't sell and hold a short for the whole bear market. It's just not. Any strong counter trend rally gets you wrecked. So anyway, that's how we're looking today. Probably not great, but we'll see. Monthly preview, weekly outlook as well. So two extra videos need to be done, and the trading competition has started. GM. I'll also talk on today's live stream about the trading competition. You can check it over here. If you are a blue belt or above, you can see all the people entering into the competition. The details for the competition are up here, which I will actually pin this latest one. So just go to the pins, click on the pin here where it says welcome. It'll bring you to that message. This one. It'll bring you to that most recent message, and you can read all about how to enter. And of course, any questions on that, tell me in the stream, and I'll do it today. That's it. GM.